All right, hey, welcome everybody. All right, the last YouTube video we talked about a rotation into energy. And over the weekend, our weekly newsletter, and a lot of you have been interested in what we do here. Again, the weekly newsletter comes with our specific trades for the week, as well as access to our live trading room, which we not only discuss what's going on in that newsletter, how to trade it, but as well, our clients have access to two different rooms, the stock room and the algo room. Here's what we had for this week. I think whether or not you take a test drive or see the value of what we provide here, let me leave you with this. A couple interesting ideas. First and foremost, this particular week is a kind of a struggle. We have the FOMC. Next week we have rollover or option expiration. We are seeing a little bit of a turn in the market, a couple technical observations. I'm not going to go through all of them. Pause the video, read them yourself. But here's a kind of an interesting concept. We do have the candle pattern was a dragonfly doji on a weekly basis, both in the spiders, SPY, as well as the futures. That has a negative connotation, even though most dojis just show indecision. I'm not a big fan of that particular pattern, which it would play into what we're expecting, a slight pullback between now and, say, Christmas Eve or the option expiration December 20th. More importantly, the NASDAQ 100 typically sees declines, and so does Amazon. And Amazon's not really doing a whole lot. It's sitting here lingering. So Amazon could still see some more pressure to the downside. Now, this chart here is something interesting that we had an uptick in average true range. The ATR, when you get breakouts of ATR, tends to show signs that the market weakens. Now, here's the interesting concept. We had a lot of gaps last week, a potential mini island bottom, and then we had an upside break. But we also formed what we would consider a potential broadening top pattern with an increase in ATR. That combined with a kind of a negative reading here or a neutral reading in the McClellan oscillator tells me that the market is vulnerable for a decline, and we may come back down and fill these gaps or at least test the lows. What could do it? A lot of things could do it. The Federal Reserve, stuff that's going on in Washington, D.C., and again, maybe a delay of the China deal. But needless to say, we are seeing right now a rotation out of some sectors, and we're seeing a rotation coming into energy. And that's what I said last week, is now the time to buy energy stocks. And we started to load up on a little bit of XOP. Today, Monday morning, our live trade room, we bought the lower open in XOP. It was an add-on of a position that we had from last week. In addition, we bought some March 22 and 24 strike calls out of the money. And then if you look today, we had someone with big volume on the December 27th, I believe, expiration of XOP. So there's someone else believing in this energy. So basically my comments, and then this right here was a special issue that we put out July 9th for longer term investors. We put out a list of 12 stocks you wanted to own. It was diversified. Back in July, the markets, if you recall, people were not expecting the market to go up. We were looking for a recession. Things were bad, China trade war, etc., headline news. But we put out a really strong list of stocks that had great dividend yields as well as unbelievable price value. Our 12 stocks were Intel. It's up 14% since then. Target up 43%. GE, it's up 2%. Delta Airlines, it's the only stock out of the 12 that we picked that's down 2%. Anyway, Bristol Myers, unbelievable. That's up another 1 or 2% today, but that's a 30% return on BMY. Amgen, 26%. There's the list of our stocks that we put out. Pretty good picking back then. All based on a few of our techniques. Weekly high close dojis, volume patterns, as well as the work that we put out. Now let's talk about this week. How does it help you this week? We talked last week about getting into energy, and you could read this little situation here, and that's why we were looking for a lower open on Monday, and we should get filled on the order in XOP, which we did. Other than that, we only had Halliburton, Devon, and ConocoPhillips, which were already long COP from last week. and I know we shared that with you in last week's video as well. So we're doing pretty well. I mean, here's what we did last week. We exited Red Rocks Casino with a profit. We're in Wells Fargo, but we put a collar strategy on just in case there was type of volatility or a downside negative reaction, in case Jerome Powell and the Federal Reserve said anything negative. We exited, took a 9% profit out of Capri Holdings, which we want to look to re-enter sometime this week, next week. We entered our Phillips Petroleum, and we entered our XOP trade. So that's our current position, and our year-to-date performance so far is going to look a little bit better here as we move forward. This, again, is a pretty decent so far return on all the trades that we've had, and you can tell we've been very active this year for a weekly newsletter that's over 2.5 trades per week. I mean, not too bad. Great performance, and again, it's transparent on what we provide our investors. Now let's take a gander here, something that I posted on Twitter a couple weeks ago, and this is where we were looking for something that's been not many times you ever have seen this, where crude oil prices actually goes up and the oil sector goes down. So it's a kind of a delayed reaction time bomb. So this is some of the work that we did just to help to illustrate certain things. And as you see, our trading room, we're all about the XOP right now. This is the oil and gas exploration. We had a breakout, and my work that we've done here in the live trading room, and if I post this real quick, you can see this particular declining wedge in the comments. We've been talking about looking to get long in that daily close over 21.98. So now, if you're not long, this is a time to maybe start to look for appreciative gains coming in the next few weeks. And I think we're going to, easily see a 22 print, 22 and maybe 23, and after that, I see a lot better, and especially as we take a look at the weekly chart. Where could I see this market going? 26 to 30 by the first week, second week of January. That's my real expectations for this trade to the upside out of the oil and gas exploration ETF. All right, so let's restore our size back there. ConocoPhillips. Monster Beverage, we noted that Monster had someone bought in the 65 calls for about 30 cents on Monster Beverage. We put that trade out for our trading community last week. Monster Beverage had a little downtick, as you can see, and then boom, right back up. Wells Fargo, made sense to have that hedge in the collar strategy. Kellogg's, we have a long position there. If you turn back, you'll see all our current positions. And then what we were talking about, Wayfair, caught our attention. Wayfair is an online furniture and home goods type of product, if you're not familiar with them. And here's the interesting about Wayfair. Wayfair, we noted that we had some longer term and short term relative strength appreciation here with an uptick in volume. So I think the bottom is in here on Wayfair. And if you take a look at a longer term monthly chart, or even let's just look at this weekly chart, lots of dojis. It had just taken out the lows, probably hit someone's stops, and then just dumped. And we're going to have a nice weekly high close doji. 104, I don't think there's a problem seeing 104, but if you look at the May options, you'll notice that there's a huge open interest at around the 150. I don't know why, but I think possibly when there's a lot of home sales and home builders do well. Toll Brothers has earnings out today. Let's hear what they have to say. But what goes into a house once you buy it? Furniture. What do new millennials do? Online shopping. Wayfair has that market, so I'm a big fan of Wayfair. That's why we've been discovering and discussing it and discovered it based on our scans and our work this week. So anyway, there it is. A couple items for you. I think that, again, Amazon has some pressure. The S&Ps. Let's double check something real quick and we'll switch screens. Right now, we've had our algorithm picked up a beautiful trade on the short side. It shows the entry on the short. It scaled out of half the position. It just went short. Again, I'm not a big fan of that, but it will have a stop that comes out. Gold had a couple good trades. And as you can see, we only have one model long SPY. Everything else is not really doing much. So there is a we've had a great morning with the algo trades this morning. And right now, I think we're going to see that little pullback to retest the lows. And Amazon, let me go back over here, gang. Amazon, double check here with you. Maximize the sell. Let's take a look. You know, a weekly close under 1722, that's not very positive. And Amazon is one of the main culprits of why we see weakness in the Qs. I just want you to remind you of that. And this is not able to hold rallies. As much as everyone likes saying, oh, Amazon's going to make money in the holiday season, it's under some pressure. So I would not be a buyer. It's trapped between this green line of resistance and this red line. A weekly close underneath that red line. And I see another $100 to the downside for whatever reason. I know that sounds, improbable with all the business that they're doing, but perhaps, that's what the charts show me. So I'm not really taking any action until I get conviction of this channel or this breakout that you see in front of you one way or another. Okay, so there we have one of our members just posted something live, and we'll put up the algo room. It should be posting in the room. So I just took it upon myself to interrupt our live trading room so that you could see what we do around here. Anyway, with that said, I hope you found information helpful. Again, it's a rollover. We're seeing conviction in XOP. We're seeing option strategies being plopped off. We're in it, and I suspect it's a good risk, low risk, good reward trade. With that said, I'll update you as the week progresses. Thanks for listening, and I hope you found value in today's quick update.